Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Sorry, I was just returning a message. I was running about a minute late. Apologize for the delay. So I want to show you guys something really quick. I sent this out via the updates, obviously, right here. So basic technical, but the reason why this is so important with the dollar yen is I'm not so concerned about the dollar yen. I'm more concerned about like some of these other yen pairs, and I know we don't typically cover them here. Hold on really quick. Morning Edge starting. Well, covering. Oops. Cover. Sometimes I have to mention this in the chat room so everybody goes, "Oh yeah, I forgot." Because everybody then strolls in a little bit late, really quick. Okay. So anyway, I just want to let everybody know in the chat room because, you get caught up chatting around in the chat room. Then you're like, oh, shoot, I forgot. It's like, oh, it's time. I mean, I was just doing the exact same thing. So anyway, I want to talk a little bit about the dollar yen. A, we hit the 161% extension. B, right now it's a breakout. Okay. The break above the 111 level is pretty big in my opinion, but I'm more concerned with what's happening with these other yen pairs. I got hit on an order to sell euro yen overnight. Okay. I got short some. I got short some Canadian yen on a spike, but the Canadian yen continues to move up into that resistance. Why? Because crude oil is so weak. So or so strong, excuse me. So the Canadian is strengthening, pushing us right into there. But you'll notice all these other pairs too, like the Kiwi yen, the Guppy pound yen has bounced back. The Aussie yen, I still think could move up into resistance here. I'm surprised it hasn't been there already, but I'll also show you what I'm seeing with the Aussie here in a minute. The Aussie yen might struggle at some resistance here at 83.70, and then the Kiwi yen as well. And if you were in the chat rooms yesterday, I drew something like this. And I think we can just leave that up. So, I think that these currencies might run into some resistance up here. And so what I'm thinking with like the dollar yen is that the dollar yen is going to struggle above this 111 level. So I wouldn't be surprised by, later on in the session that we're trading back here at 111.10 or so, just kind of trading around these levels. Now, tomorrow, and I want to talk about this really quick because I want you guys to think about this. I'm not going to be trading the dollar or the dollar yen tomorrow. All right. I'll tell you why. Because the dollar yen, I'm not sure if it's going to act the way it should in the post news, what I'm trying to say. So let me explain to you what I mean by that. If we have strong data and stocks go down, and I'm going to stay here with the dollar yen because I might as well put it out on the bias chart right now. If you get strong data, strong US data tomorrow, strong jobs report, what do you think is going to happen to stocks? I'm asking you guys just to think about it. You don't have to answer if you don't want to. It doesn't, I just want you to think about it. If strong data, stocks, Gorkum says stocks are going to go down, right? They'd fall. Correct. Now, if they fall, you have another part of the puzzle here that you have to think about. What's going to be stronger, the dollar or the yen? I don't know. I would think if stocks fall, the yen becomes stronger than the dollar. So that means the dollar yen actually goes down. So now you got a little bit of a problem because you're like, oh, strong data, I bought dollar yen, stocks to go down, dollar yen slips and falls, and then you get, kind of, screwed there. So what I'd rather do is I'd rather trade like the Aussie dollar or the euro dollar, something like that. I think those are going to be more straightforward trades going into tomorrow. Okay, so just giving you guys a little heads up. So support right now for the dollar yen. I have to put it, I don't want to, but I have to because it is what it is. Whoops, shoot, I don't want to do it. 111.10, it's got to get a bullish designation for right now, because right now we're breaking out. I may think that this channel is significant. Personally, I do, but that doesn't stop the fact that, here, let's just do it this way. That doesn't stop the fact that we are breaking out. You know what I mean? I may be thinking one thing, but technically you look at this chart, this is a daily chart. This is an unmolested by Blake with lines chart. It's breaking out. I mean, any which way you slice it. So I can't ignore that, right? I can't. But I feel that we are up against resistance. So the overnight high was at 111.62. So I'm going to write down 111.62 as resistance. Okay. All right, let's go to these are going to be more straightforward. Again, I'm not going to be with you guys tomorrow. That's why I'm kind of putting some emphasis on this, because I'll be doing the trading battle tomorrow morning with Dave. Yeah, I was talking. I'm so sorry. I'm just, for some reason, I'm like super tired this morning. I slept really well. It's just, I need to find I need to find a way to squeeze in like 1 more hour of sleep at night. It's just difficult, I was trying to explain to people where I live, because I get up so early. I get up at like 3:30 my time. I'm usually about 3 hours behind everybody. So, for example, if you guys watch the NBA, last night was, the Phoenix
Go Suns. Yeah.
Yeah, I know. I mean, it's the first time we've been Western Conference
since Charles Barkley was playing, right?
Yeah, since
1993.
Yeah,
there you go.
So it's a big deal for basketball people, and like, I'm just giving you guys an example. Like, for me, I stayed up and watched the game, and then it was 9 o'clock my time. By the time it was all said and done, and then by the time I can wind down and go to bed, it's 9:45, 10 o'clock, and then I'm up at 3:30. So it's 5.5 hours of sleep. It just I'm usually about 3 hours behind everybody else, or in front of everybody else, the way I look at it. Where my wife will stay up till 11 o'clock at night. And
by the way, Blake, now that Giannis is injured, only one left. You get somehow Middleton injured as well. I think the Suns can actually win it.
Yeah, I think it's we have a shot. We do have a shot. So
yeah, with Antetokounmpo out of commission, definitely.
Yeah, we will see. Hey, all right. So shut up, Chad. Chad goes, "Go Hawks." He's laughing. All right, let's get into the chart. Sorry, I didn't mean to go the rant. The reason why I was just saying that is just because I'm yawning and I can't help myself. But I want to talk about these are more straightforward trades with tomorrow's jobs report. If we have a strong jobs report, just remember, strong jobs report is going to mean strong dollar against most currencies. Weak jobs report is going to be weak dollar against most currencies. I would actually use the Aussie dollar or the Kiwi dollar or the Canadian dollar as more of good gauges on how to or what to be buying or selling. You know what I mean? If the Aussie is falling aggressively, then that dollar strength is coming through the market. If the dollar Canadian is going down, then that the dollar is probably weakening against everything. That type of thing. Okay, sorry. Euro. So the euro's finding support at these lows. We did probe through new lows, so I'm going to have to write these lows as key. I know we've been writing 118.45, I think. Let me double check that. 118.45. So we went as low as 118.37. So I'm just going to write down 118.40. It's just, whatever. Okay. Resistance. Now, it looks like right now, right at this moment, we're probing some. You could argue is a little bit of descending trend line. I actually still think we can bounce. So resistance should be 119.10 ish. That's what we had yesterday. 119.20. Okay, we had a little higher, but I'm gonna go with, because we couldn't make above those spike highs there, so that's 119.10. And frankly, if you get if you really are a dollar bull, that's probably not a bad place to be on the short side of the euro. One thing that's worrying me a little bit with the cable is this little false breakdown here. So 137.65 is support. Now, I am still bearish, but you got to be a little, obviously ahead of non-farm payroll. You just got to be careful now. So 138.70. It's not straightforward. Like, it's not like, oh, here we are. We're going to, the dollar is going to pull back ahead of jobs. I'm still long the dollar, but I'm not thinking that, because you have to keep in mind the dollar index has been so damn strong this week. I'm sure if you're short the dollar, you're trying to cover at any little dip you get, right? So anyway, let's go over to the Aussie. Obviously the lows are holding 74.75. Man, if this thing breaks, then 74 cents comes real quick. There's 161% extension. I mean, we'd fall to the support zone pretty quick. But I don't think we're going to do that today. So, and this is where people get into trouble. So let's think about this really quick. I just want to, kind of share this with you. This is where people get into trouble. I think that ahead of, key data, we tend to find ourselves mid-range, right? But it's not going to happen every time. You guys understand that, right? I mean, most of the time, like if I identify like this Aussie dollar, I'm just using it because it's on my screen. If we go, okay, there's the range. Most of the time we end up in the middle of the range ahead of the jobs report, right? But this week's been a little different. The dollar's been strong all week, right? So this is where people get into trouble. People go, oh, really key support here in the Aussie. And we got jobs report tomorrow, so there ain't no way they're going to push, support. They're going to push through this support. So what happens? People try to go long because they're like, oh, it's got to bounce, right? Of course it's going to bounce. And then what happens is different than that. What happens instead of getting a bounce is you get the Aussie that just slumps right back towards support, and we hover around the support going into tomorrow. And then that puts a real big risk for anybody who's long, anybody who's trying to play it on a bounce. Then we flush through these lows on a strong data point tomorrow. That's the trouble that people get in ahead of the news. They think they can outsmart the market, thinking, oh, well, they're not going to push the support, ahead of the jobs report. So I might as well just get long here and just look for a 20, 30 pip bounce. Yeah, but just be careful. I think that resistance, I mean, it can happen, by the way, getting a bounce. I'm just saying this is how a lot of people get in trouble, because they assume that they're going to outsmart the market at this point. I'm going to say resistance at 75.40, spike high, spike low. This little spike high here, you know, after selling off, if we can get up to 70, I mean, 75.40 will probably offer some resistance intraday. Not great resistance. I just think it is resistance. This is bearish. Kiwi, you know, I'm questioning. I've been questioning being too bearish to Kiwi, and you know what? Look at the difference between how the Kiwi and the Aussie has reacted. The Aussie is up 2 pips on the day. The Kiwi's up 24, right? So I mean just take a look at what's the overnight price action versus this. I'm going to draw this for you. Just look. Aussie Kiwi. And I've told you the last couple of days, I'm really hesitant to put Kiwi bearish because we haven't probed into new lows. And this is case in point today. Let me delete all this crap and go back to that. Case in point today is the Kiwi's up 23 pips and the Aussie is only up 2, because when you're failing to hit new lows, the one that's failing to hit new lows is going to bounce a little bit easier, right? So 73 cents is resistance, 69, let's just call it 69.60. And obviously 69.20. It just if for some reason the dollar starts to come out of its shoes for whatever reason. Whoops. Which I don't think to be the case. I'm just in case. All right. Dollar Canadian. Pulling back a little bit. Let's see if we can get a pullback to 123.30. I still think this is bullish. Resistance right now is 124.25, then 124.70. Dollar Swiss. Yeah, I blogged about this yesterday. Obviously, the 618 is holding, so that's going to be 69 or 69, 92. Let's just call it 92.70. It's bullish. I mean, we're in a bull flag pattern. And while we're above 91.60, just got to be bullish. You guys did read my blog yesterday. Let me just go ahead and do this for you really quick. In case the Swissy rallies, in case it does, okay? If it does, and we get this pennant that plays out, this is going to be a really good risk reward for a short. I'm not saying that we are going to go up there. Obviously, we have to wait for non-farm payroll. But if we make it, like, you know, Steve was talking about, hey, I want to see the dollar, you know, make another rally, then I'm going to look for a short. I think this would be a perfect trade to be on the short side. The dollar Swiss. Because you have the underside of this trend line. You have this multi-year, 5-year broken trend. This one right here. This dotted line, see it? There. There, and then quite possibly there, right? So this is going to be a really, really great place to be on the short side of the dollar Swiss if we make it up there. And you know, just from a risk reward perspective, you know, because then we create a lower high, and it would set the stage for, you know, a move back down towards 91 cents, you know. Then all you need is a little bit of risk aversion, because whenever you get some risk aversion, the Swiss is like, you know, one of the best currencies to be owning. So, and the flip side of that is if you break, you know, this resistance, you're probably going to be going a lot higher. So, you know, decent risk reward from there, in my opinion. Okay. Sorry, I got on a bit of a tangent, but that's what I was thinking with my blog yesterday. Dollar Norway, 200-day moving average. Boom, boom. 866. Where's support? $850, $855. Not bullish yet. Got to break that 200-day moving average. Dollar MEX holding above 1990. Resistance here is 2020 roughly. 200-day moving average here. That's what I would be thinking. Well above 1990, 2020. Okay. We're still in a range. This 2030 is up here, if you guys don't remember. Dollar yen, I think we already did that. Dollar index. Okay, so probe against those highs. That is 92.55. Remember, trend line up here comes up here. We ain't making it up here today. I'm just pointing it out. That's at 92.85. So today, 92.65 is resistance. Bullish. $92.15. That's the 38% retracement. We talked about that on the FA.C.E webinar, and I think that should be decent support today if we can make it down there. Problem is, I just don't know if we're going to make it down there. Oh, I was talking about shoot, this is on the FA.C.E webinar. Dale complimented me and he goes, "Hey Blake, great short in Bitcoin." And I totally screwed that up yesterday. I'm such a bozo. You know what happened is it was an Asian trade, and you can see the Ethereum in Asia started to break this resistance, and I'm like, gosh damn it. You know, I knew the 618 was here, but I'm like, this damn it, I was just like, gosh dang it, this Ethereum is going to try to break out. I knew it was up against 618, but I thought, the thing hasn't really pulled back. So when Ethereum started to break out, what did I do with Bitcoin? Well, when it was right here at 35, I was like, fine, right here. And then of course it popped up, and I should have known better, while we're below 36.5, there's no reason to even be buying. No reason. I cannot believe I got wiggled out of that. Like just a putz. I'm so upset with myself regarding that. The 200-day moving average. None of the analysis has changed. I just traded it like a damn wussy, and I pointed that out in the chat room yesterday. I'm like, I am such a wuss. Like, here, for those of you not in the chat room, is that today? Let's see. This is me yesterday. What a punk arse. Wussy. See, I mean, this is me realizing I made a mistake yesterday. I knew it. As soon as I did it, I'm like, oh my God. 10 minutes later, I was like, oh, Jesus. Yep. So if you ever think that I don't get wiggled out of stuff, it happens to me all the time. Just like it happens to you, happens to me. Gold. So gold's facing some resistance here. I still am in the camp while we're below 1800. No reason to be on the long side. And I'm going to write down 1750 as being support. And I know we had 1729 and 1755, but to be fair, I mean, we just kind of probing the 1755 level and we're holding it. So we have to get below 1750 for us to turn bearish. So this is key, or for us to be, we have to go below 1750 for us to target 1680 or whatever that, pennant target is, but that's it. Silver. I think silver, we just have to look at like this. $26.50, $25.50. Let's just make it simple. $25.50. This is key. $26.50 is resistance, not necessarily key, and we're in a range, right? That's it. Last. Oh shoot. Last, S&P. Oh, this is easy. 42.60, bullish. 43.75. Whoops, dang it. Because we're above that confluence. So 43.75 up here, 43.45 is the so 43.45, then 43.60, 43.75. There you go. Done. Finito. Stelios, did you get that?
I got it.
All right.
You
Good.
took your time today.
Yeah, I did take my sweet ass time. I think I was in storytelling mode. That's because I'm going to miss you guys tomorrow. So, hey, good luck, everybody. I'll see you in the daily roundup today in about 4 hours, 3 hours, whatever. And I'll see you soon.
6, 7, whatever.
Yeah. Well, all I know is I have to be back here in a few hours. So I'll see you guys in a few. You guys have a great one. Thanks, everybody. Talk to you later.
Thank you, mate.
Thank you. Okay, so nothing major since the market opened. Stocks are undecided ahead of tomorrow. Kind of makes sense. The dollar also is sideways. Not much really happening. Cryptos are the only one that are really moving, and obviously oil just keeps going. $76 now, and what was it?
Yes.
70, 77. What was the high? 76.80, 77, something like that. The 2018 high.
The high is at 77.07.
Yeah, well, we might. I think it's highly likely we'll test that. We might even go above it a little bit just to take out some, to bring in some longs and to take out any shorts that are left.
Yeah, now that we've got so close to it, it looks, really appealing, right?
Yeah. But really, not much else to say. I mean, there has been very little.
Oh, by the way, we have PMIs coming out in about 15 minutes, right?
Yes, you are right.
Yes,
ISM.
US market
yeah,
manufacturing PMIs.
So, yeah. It's going to be important data. I forgot to mention that. And that's, should be key. So
thank you. Yeah, not much else to say, really. Is that the big picture stays the same, and the question is, what will the Fed do? Are they going to be tapering in October? It kind of seems to be getting to the consensus now. Sometime late this year, maybe October. Jackson Hole before that. So, but it's a binary thing. So I don't know. I have no dollar positions at the moment. I still have my precious metals and staying pretty light. I'm definitely not doing anything before tomorrow's numbers.
Yeah, same here. I mean, I wouldn't want to be short the dollar now as we speak, but I'm going to actively switch to trying to find trading opportunities being short the dollar once we get another leg higher and it starts looking like it's losing momentum. But in the short term, I think the path of least resistance remains higher. So very frequently events or data, one way or another, favor the a continuation of the technical picture. So I wouldn't be surprised if tomorrow's NFPs push the dollar higher for one or another reason.
Yeah. Steve, I have to run to go get my girls, so I'll leave you with everybody, and I'll speak to you in a bit.
Sure thing, mate.
Okay.
Bye-bye. Okay, so oil still going? Yep, absolutely. Oil still going. If you remember, we had a look at crude oil on the 4-hour chart 2 days ago, and we had a look at it yesterday as well, where I said that, in order for crude to, to switch to being bearish, we needed to see a break below 72.50, 72.60, and that didn't actually happen. I mean, it happened for what was it, like half an hour, 1 hour or something like that, but this is not a breakdown, right, in any way. So once we fail to break lower, doesn't really surprise me that we ended up breaking higher from this rectangle, because this was in essence a range, right, a rectangle. So we broke, instead of breaking down from there, we broke up from 74.60, which has an implied target of roughly $2 as the rectangle's width was, which points to 76.60. We're already almost there in less than 1.5 days. And coincidentally or not, 76.60 is exactly at this trend line resistance as we speak. So we make it to that trend line resistance, which seems extremely likely where we currently are, and with the kind of momentum we have, and we've already fulfilled within, as I said, less than 1.5 days, the upside target of that rectangle, right? Now, as Stelios mentioned before, we're getting extremely close to the multi-year high that we had in October of 2018. And when we're talking about a multi-year high, we really mean a multi-year high, right? Because in order to get to these levels again, you need to move back towards the end of 2014, right? So now we're talking about being extremely close to a 7-year high in crude oil. And yes, I also agree with what he said, being so close that we are now, knowing how devious the market tends to be, I really wouldn't be surprised if we take out the previous high temporarily, get everybody that was short capitulating, knocked out of positions, etc., and then finally be free to turn lower. Because as I've said several days ago, when we actually hit the 74.60, 161.8, the easy money, in my opinion, have already been made to the upside. And this is not the place anymore to the point in time actually anymore to be chasing crude oil higher. I think it's a big mistake. I think this market sooner rather than later is going to have to strongly correct lower before we can actually resume to the upside, because now it has, from being from crude oil being a pariah and everybody is being like, oh, crude oil is over and done, and that's it, this market is never going to be recovering, and all that BS, which we said back then with Stelios that forget about crude oil not recovering, it's going to recover. Now it has become more of a consensus thing that crude oil is strong and it's going to remain strong, and this is when you want to look the other way. Now, I'm not advocating that you should be short crude oil, not if you have a time horizon and a trading style like I have. But I'm looking forward for a pullback, because I would be more than happy to buy crude oil at much better levels. So I don't want to be short, but because that's not my trading style, I'd rather go with the trend. But I'll be more than happy to see crude oil giving us much better levels to be long. Of course, we need some time for that to happen. I mean, we first need to see it roll over, then pull back, then get a satisfactory enough retracement before we can be long again. Now, having to do with gold, silver, and all the rest, nothing has really changed, meaning most likely we're still consolidating in what looks like what look to be like temporary formations that have a good chance of breaking the downside. As I said before, I'm looking for possibly one more high in the dollar, which means that I find it extremely likely to see one more low in gold and silver before the bottom out. And the rest of the metals look more or less the same, with the exception of palladium. Because palladium has had this, rather impressive move higher after this huge day lower that we had, like this amazing day lower that ended at the confluence, triple confluence of supports, the 200 daily moving average, the 61.8% fib from the last leg, bullish leg higher, and this horizontal support resistance area, and the psychological level, right, 2500. And look at the reaction it had since. It took us several days, but in essence, we've retraced the whole move lower, and we're actually breaking through this descending trend line resistance. And I think this is, if we confirm by the end of the day, this is likely quite a bullish development. So keep that in mind. Now, the rest of the metals, look more or less like gold and silver, but palladium has had this extraordinary recovery, and needs to be said. Now, what else did I want to mention? Now, having to do with equities, clearly ahead of tomorrow's, like, let's call it event risk, right? It is somewhat of an event risk. We've had overthrows in both of these bullish formations, right? But would you be chasing and buying up here? Would you be doing that ahead of NFPs? I think it's a very dangerous proposition. Having said that, clearly the bull trend has had nothing wrong happening with it, so you can actually be bearish, right? So it's it's the usual game of remaining patient through the grind higher until something changes, right? Buying here is not an option, doesn't make any sense. It's FOMO. Selling, on the other hand, with zero evidence of a reversal is also not smart, right? Now, having to do with upside targets, since the trend remains higher, so upside targets should be the approach you should have, meaning you should first look higher than lower. Next upside target in the S&P is the 161.8% extension of the sharp but short-lived pullback that we had in May, which is at 43.75. Right. In the case of the Nasdaq, the equivalent level is at 14,960, right? So almost at 15,000. So keep that in mind. And in order for anything ahead of NFPs tomorrow, in order for anything actionable to happen having to do with a pullback, I think at the very least, in the case of the Nasdaq, we need to see a move below 14,000. In the case of the S&P, I think at the very, very, very least, we need to see a move below 4250 before we can even consider the possibility of a of some kind of a reversal. Now, until any of that happens, keep looking higher, keep respecting the trend, so on and so forth. Now, it was mentioned before that cryptocurrencies are ahead of the NFPs, the only thing that seems to be really moving. The rest of the assets obviously are in wait and see mode. But cryptocurrencies don't work with the same criteria, and for a good reason, to be honest. I mean, these markets are not really, in my opinion, should have no correlation to what's happening with the Fed or whatever, at least not in the short term, right? So yeah, we've seen a decent move lower both in Bitcoin and Ethereum. Yeah, I know that 5, 6, 7% is not like a groundbreaking type of move for this assets, but in any case, in my opinion, it shows that the direction of the trend remains lower. I do see the rebound from the lows being corrective, and I still favor one more move lower, at least in Bitcoin and Ethereum, to complete at least the first leg lower for from the mania highs that we had in almost $4,400 in the case of Ethereum and almost $65,000 in the case of Bitcoin. So nothing has changed there either. Now, go ahead. Give me any questions you have. I think I've covered more or less what I was looking at. Oh, yeah, there was one more thing I wanted to mention. USD yen. I almost forgot. So USD yen, the reason I wanted to mention it was because it's once again testing this ascending channel trend line resistance. We've already produced a higher high. What is troubling though still is that there is a very noticeable RSI divergence. Look at this previous high. RSI was at 83 roughly. Look at the current higher high. The RSI not even being at 70. Also look at the manner in which we moved higher. The reason I'm saying all that is because it makes me extremely skeptical to be long. I know that it's been moving higher. Oh, also one more thing. So far, this move is definitely not backed by yields. By the way, we just got ISM manufacturing data. 92.1 for prices versus 86.5. So basically prices a lot higher, but the PMIs are lower, 60.6 versus 61 expected, with the previous one being 61.2. So we were looking for a little bit of a slowdown from the previous month's data, but we got more of a slowdown. It remains interesting, though, in my opinion, that it's another index that we see prices higher than expected, right? As I said, 92.1 versus 86.5 that was expected, with previous being 88. So the market was actually expecting the prices to cool off in comparison to previous month's data. And instead of having that, we had an acceleration higher. Keep that in mind and put it in context with all the rest we've seen. Now, what I was saying about the USD yen and yields is that, yields are actually not confirming this move either, right? So keep that in mind. And we can also do this. Look at this. Right? You can see that the correlation is rather tight. Look at this divergence, right? We've had 10-year yields moving lower since this high there, while USD yen still pushes higher. I don't think this divergence can remain there indefinitely, right? Now, having said that, you already know my bias having to do with yields. I do think that yields eventually are going to break higher from this corrective formation, right? So perhaps yields will be able to close the gap before USD yen has to do it, right? Just putting that out there. In any case, I wouldn't be long here USD yen. We are at resistance, as I showed. But in any case, I do think it's at an interesting juncture. Okay, go ahead. Give me any questions you have. Awfully quiet crowd today. PLTR. Okay, nice pullback from the 38.2 after having hit overbought conditions, which is good. I mean, it's a good indication for this to have bottomed out. So until proven otherwise, I think buying the dip makes sense. In fact, we're more or less approaching the first, area of interest here, right? So yeah, this is the first area of interest. Below that, we have to go roughly at 23, like 50. So let's also draw this. So you see we've temporarily broken through this. But as I said, probably a corrective move, right? Something like this might be the cards. UAVS. Yeah, I wouldn't call this a breakout, so we have to redraw. And why wouldn't they call this a breakout? Because of the way we've been trading, right? So there you go. Because, it's not only about levels, it's also about, type of price action. And so far, this price action does not react as it should if we actually had a breakout. So there we go. Steve, I know the bond market is a fake market. Yes, it is. Now that has been zombified by the Fed. Yeah, I mean, I couldn't put it better than you just did. With all these QE and asset purchases, do you think the same thing for the equity market, specifically the indices? This stratospheric move certainly doesn't look normal. Listen, I've said it before, and you're right about it. Financial markets, for good reasons, are correlated with each other, right? One of the most basic and fundamental reason is opportunity cost, right? I mean, there has always been this push-pull relationship between bonds and stocks because in essence, these two markets are competing with each other for funds, right? So how can you have extremely elevated stock markets if you have bonds yielding, high yields, right? Obviously, that's going to siphon money out of the stock markets. So to go to where you already were, to go to your point, if not for the bond market bubble, for the fixed income bubble, there could have never been such a bubble in equities, because one requires the other. So even if we assume that the Fed does not manipulate the stock markets in any other direct way, which is still an assumption. We all know about the plans protection team, so on and so forth. But even if we assume that they had absolutely no involvement with the stock market one way or another, just by central banks manipulating bond markets and keeping yields so artificially low, in essence, they force stocks to move higher, right? Because money is chasing returns and they can't get these returns anymore via fixed income, right? So that's you're exactly right. That's the case. Without the fixed income bubble, there could have never been such an environment with so frothy stock markets. MU. Yeah, nothing has changed since the last time we had a look at it, right? Still within some kind of a corrective move, right? But who knows? This thing might take, a decent more time to unfold. I mean, we don't even know yet, if this is the exact formation or something else. But, but for sure, we still have some type of we had one move lower. I now see some kind of a consolidation here. There it is. You can even look at this as a rectangle, right? Let me show you. There you go. So, we break through this horizontal support area. We should see another extension lower before higher, right? Interesting where we got rejected, to be honest. So short term, if you want a short-term trade, you can even look lower against like 85.50, right? Towards this support area once again, which is at 75.80. We break through 75.80, which I think is likely for that to happen first. And then we should be targeting lower lows before this corrective move can be over and we can look for higher levels. Don't forget we had a very strong move higher, and this likely is in need of a bigger corrective move before. Let's also fit this. Okay, there you go. Before we can continue to the upside. So I don't think you should be buying this yet. WDC. Western Digital. Huh. Look how nicely this worked out, right? We had the breakout from this triangle. That was a terminal move. We've already pulled back. And in my opinion, it is very likely that we have more to go, right? So I think lower for the time being. Yeah. I think lower for the time being. This looks like a nice bear flag. The rebound is very corrective in nature. So RSI also was hugely diverging at this new high over there. There you go. UPS. Phew, amazing. Okay, this was the easy trade there. Really easy, technically speaking, I mean, perfect formation, right? Perfect. In some kind of a correction here, again, you have to respect the upside. We break above this trend line resistance, new highs are coming. But, you know, RSI and a couple of other factors would make me skeptical in jumping the gun. I would only buy it if it broke through this trend line resistance. Because, you know, who knows, we might need to do something like this before we can continue higher. So keep that in mind. DXY gains a bit now. Let's have a look at the DXY post PMI data, since you mentioned it. Yeah. Nothing really to write home about. Yes, equities are a little bit stronger post data. The dollar is a little bit stronger post data as well, but I mean, you know, it's minor, so it's within the context of noise. I don't think that it's likely that this market is going to do something big ahead of tomorrow's event risk. So I think there is a very good chance today is going to prove to be a rather boring day in the markets. That's what I would assume. Okay, guys and girls. See you tomorrow. Tomorrow should be an interesting day. And as I said, we had a question about Dogecoin as well. Sorry, I just noticed it. And Snap and natural gas. Oh, how did I miss all that? Okay, so sorry. Natural gas seems to be stalling. I mean, it had a very sharp move higher, but I think that stalling is just taking a breather, right? Worst case scenario, a pullback to 338 and a continuation higher. I think it's very likely. Now, having to do with Dogecoin, or whatever, however it's pronounced. We had a nice V-shaped short-term recovery there. And somebody could make the case that we might see another leg higher, but I'm afraid we're not done, right? Something like this is what I can assume will happen with Dogecoin. Snap, and then we're done. Snap seems to be breaking out. Snap seems to be breaking out. You know, momentum is not one to get you enthusiastic, but nevertheless, we've broken through these two trend line resistances. So you need to respect the upside. And if you want to be very conservative with risk, since we don't see really big momentum with this move, I think 65.50, which is very near, is a nice, interesting support area, for somebody to put the risk. If you want to start this conservatively, like being long against that and, readjusting your risk parameters if we continue higher. But yeah, it has done nothing wrong for the time being, right? So it's likely that we're going to see new highs from what I see here. Hope we will get interesting news from OPEC later, like increasing the production higher than expected, says Gorkim. Yeah, I mean, some kind of a catalyst might come through to actually make this very strong crude oil market to roll over. It might as well be the OPEC. Not unlikely, right? I've told you before my opinion about event risk like that, meaning, a market will often take its hint to reverse following such a thing, but only if the market is actually ready. Because if the market is still undervalued, based on the perception of market participants, even crude oil, even if OPEC increasing crude oil supply is not going to prove to be enough. But I think that now this market has started getting to the point that sentiment and positioning are starting to favor a reversal. So in this case, I think that OPEC might be enough of a catalyst to trigger something like that. Eventually, I think with that new government, Iran will try to get in the market, which will ease the crude. Yeah, I mean, Iran has had reduced supply capacity for a long period of time now, and an increase from Iran's side, definitely is going to help in that direction. Also, Russia doesn't need higher prices. It doesn't need. Yeah, it doesn't need higher prices, but I don't think they mind it. Okay, guys and girls, see you again tomorrow. Have a wonderful afternoon. Bye bye.